Bitcoin has plunged below the critical $77,000 support level, triggering a wave of forced liquidations across the cryptocurrency market. What does this mean for investors and the future of crypto? Let's break it down. As Bitcoin trades below the $77,000 level, several scenarios could unfold in the coming days. The recent price decline has sparked concern among traders and investors. This drop is attributed to a combination of macroeconomic pressures, regulatory scrutiny, and shifting investor sentiment. The Federal Reserve's interest rate hikes and inflationary concerns have created an uncertain economic climate, prompting many to reconsider their investments in volatile assets like cryptocurrencies. Traders will closely monitor whether Bitcoin can reclaim this crucial support level. A rapid recovery could suggest that the current dip was merely a liquidity flush, not a fundamental shift, signaling resilience in the market. On the other hand, if Bitcoin fails to regain this level, it could indicate a deeper correction, potentially triggering panic selling among retail investors who may react emotionally to price movements. The flow of institutional investment and ETF data will also be critical in the days ahead. Historically, institutional interest has significantly influenced Bitcoin's price trajectory. Continued inflows, especially from large players, could stabilize the market and restore investor confidence. Conversely, any signs of withdrawal could exacerbate downward pressure, leading to increased volatility. Furthermore, the ongoing level of liquidations will be essential to monitor. High leverage in the market can amplify price swings, creating a precarious environment for investors. The cryptocurrency market is inherently unpredictable. As we analyze these developments, the implications of regulatory changes and macroeconomic trends could further complicate Bitcoin's path. Additionally, retail investor sentiment, often driven by fear and greed, could lead to exaggerated market movements. With all these factors at play, the coming days are critical. Bitcoin's ability to stabilize or its potential for a more significant downturn will become clearer. Investors must brace for volatility as the market seeks direction and clarity in these uncertain times. The decline of Bitcoin below the $77,000 mark did not happen in isolation. It is the culmination of various factors that have developed over the past weeks and months. Following a robust rally earlier in the year, traders began taking profits, leading to a gradual weakening of Bitcoin's price. This profit-taking behavior is typical in volatile markets, where quick gains prompt investors to secure their earnings. Coupled with this was a general sense of macroeconomic uncertainty, fueled by rising interest rates and inflation concerns, which heightened risk aversion in the market. Investors often retreat from high-risk assets like cryptocurrencies during such times, seeking safer havens. Compounding these issues was a significant amount of derivative positioning, which amplified the downward movement once Bitcoin began to slide. As leveraged traders faced margin calls, forced liquidations ensued, exacerbating the price drop and creating a cascading effect. This situation mirrors previous market corrections, such as the events in May 2021, when Bitcoin lost substantial value. The motivations of key players, including institutional investors and retail traders, have also evolved. Many are now reevaluating their risk exposure in light of the current market conditions, leading to a more cautious approach. The interconnectedness of these factors reveals a complex landscape that continues to evolve, with Bitcoin at the center of these dynamics. The impact on the broader cryptocurrency market has been significant, as altcoins also experience declines amid Bitcoin's downturn. Looking ahead, analysts anticipate that Bitcoin's price could stabilize if macroeconomic conditions improve. However, the potential for further volatility remains high as traders navigate this uncertain environment, particularly with upcoming regulatory developments and market sentiment shifts. Investors should remain vigilant as the situation unfolds, closely monitoring economic indicators and geopolitical events that may influence market trends. Bitcoin's recent drop below $77,000 has significant implications for the entire cryptocurrency market. As the foremost cryptocurrency, Bitcoin sets the tone for market trends, influencing a vast array of digital assets, including altcoins and decentralized finance (DeFi) tokens. This decline is not merely a fluctuation, It marks a pivotal moment for many investors, particularly those who have heavily invested in cryptocurrencies over the past year. The immediate consequence of this downturn is a notable shift in market sentiment. Investors who once embraced a buy the dip strategy are now adopting a more cautious, wait for confirmation approach. This change underscores the inherent fragility of market structures, especially amid high leverage environments that can amplify both gains and losses. Analysts warn that forced liquidations can create a cascading effect, dragging prices lower across the board. For example, major altcoins such as Ethereum and Cardano have also experienced significant declines in their values as Bitcoin's fall reverberates through the market. The broader economic context exacerbates this volatility. Macroeconomic uncertainties, including persistent inflation concerns and ongoing geopolitical tensions, have heightened risk aversion among investors. This climate of caution has made even robust institutional flows and growing ETF demand insufficient to stave off sharp market pullbacks. The result is a landscape where average investors must navigate considerable risks, as the potential for further declines looms large if Bitcoin fails to reclaim its lost support levels. The impact of this market shift extends beyond mere price adjustments. It affects investor confidence, trading strategies, and the overall health of the cryptocurrency ecosystem. With many investors hesitant to enter the market during this downturn, liquidity may diminish, further exacerbating volatility. As we look ahead, the outlook remains uncertain. Analysts emphasize the importance of monitoring key support levels for Bitcoin and the overall sentiment of institutional players. If Bitcoin can stabilize and regain its footing, it may restore confidence among investors and potentially lead to a recovery across the cryptocurrency market. Conversely, continued weakness could lead to further sell-offs, prompting a reevaluation of investment strategies. The coming weeks will be crucial in determining whether this downturn evolves into a temporary setback or signals the onset of a more profound market correction, shaping the future landscape of digital assets. On May 19, 2026, Bitcoin faced a significant downturn, slipping below the key psychological and technical support level of $77,000. This marked a pivotal moment for the cryptocurrency, as traders had viewed this level as a crucial point of stability. The price dropped sharply around 10 a.m. UTC, triggering a broader market sell-off that resulted in hundreds of millions of dollars in forced liquidations, primarily from over-leveraged long positions. Reports indicate that nearly $400 million in liquidations occurred within a few hours of the drop. This situation escalated quickly, as the drop in Bitcoin prices forced many traders to exit their positions, exacerbating the downward momentum. The rapid decline is particularly striking, as it contrasts sharply with the bullish sentiment that had characterized the market just days prior. To understand this downturn, it is essential to consider the overall market dynamics leading up to the event. Bitcoin had enjoyed a substantial rally in the preceding weeks, driven by positive regulatory news and increasing institutional adoption. However, this exuberance masked underlying vulnerabilities, particularly the unprecedented levels of leverage that many traders were utilizing. Such high leverage can amplify gains, but also significantly increases the risk of catastrophic losses in volatile markets. The impact of this sell-off rippled throughout the cryptocurrency ecosystem. Altcoins and other digital assets followed Bitcoin's lead, with many experiencing double-digit percentage declines. Retail investors, who had entered the market during the recent bullish phase, faced significant losses, leading to increased skepticism about the sustainability of cryptocurrency as an investment. Furthermore, this event has reignited discussions about the need for greater regulation in the cryptocurrency space to protect investors from excessive risk. Looking ahead, analysts are divided on the future direction of Bitcoin and the broader market. Some believe that this downturn could serve as a necessary correction, allowing the market to stabilize and reset before embarking on another upward trajectory. Others warn that the fragility exposed by this event could lead to further volatility in the near term. As traders recalibrate their strategies, the focus will shift to key support levels and the potential for regulatory developments that could shape the market's future. The coming weeks will be crucial as participants gauge the resilience of the cryptocurrency market in the wake of this significant downturn. As Bitcoin struggles to regain support, what do you think will happen next? Will it stabilize, or is a deeper correction on the horizon? Share your predictions in the comments and subscribe for daily deep dives.